When you decide what you want to launch next, a lot of people will go to a tool like Jungle Scout or Helium 10, and they will start with the product in mind. And I feel like that is backwards.
Hello, I'm your host, John Cavendish, and welcome to the Amazon Strategist Show, the show that's all strategy with no hacks, no silver bullets, and no magic pills. Just real practical strategies to grow your Amazon business. So today I'm joined by no other than Matt Ramuzzi from Capforge. So Matt has been in business since the year 2000, which must make him one of the longest surviving, to be honest, businesses that we've ever had on the show. And we're going to be talking about finance and bookkeeping today. But Matt has done it all. You know, he came out of a business and the year 2000, started a consulting business, and that's moved further and further across until moving mainly into finance and bookkeeping since 2012. So he's been in the bookkeeping space and finance space before most of these businesses even started. So I'm really excited to have a conversation today, diving into finance, bookkeeping, cash flow, wherever we go. But welcome to the show, Matt.
Yeah, thanks for having me and making me feel super old.
It's a bit experienced.
Yes,
valuable. Right. Like a fine wine. Cool, Matt. So I hear you're in San Diego. How long have you been there?
Yeah, I grew up in Los Angeles, but I moved down to San Diego to go to university, and I just never left. It was just too nice. You know, a fraction of the people in LA, a fraction of the traffic, much nicer, smaller town down here, and it's great. I can't complain. I live in a place where people come to vacation, so I must be doing something right.
Me too. But yeah, I identify with that. And when I was in San Diego, like perfect climate, more of a relaxed vibe than LA, and less insane concrete-based commuting through just blocks and blocks of concrete.
Exactly.
So love it. Cool. So how did you get kind of pulled into the e-commerce space after you'd started your business?
Well, I can't claim any genius insight into, what would be a great growing industry to get involved with. We got a call kind of out of the blue from a guy coincidentally named George Carlin, which is the same name as the famous American comedian. However, it turned out it wasn't that George Carlin. It was a different George Carlin. But he said, hey, I sell stuff on Amazon and I need help with bookkeeping. Can you guys help me? And I said, well, we've never done that before, but we'll take a crack at it. And we got into it and realized there was a lot of things that were different and unique about this. And we had a big learning curve to kind of get to the point where we could say confidently to him, okay, we figured out a good way to do this. We figured out a good way to report your results for you. And now, we can help you out on an ongoing monthly basis on how to do this. And he was super happy, and it gave him clarity he hadn't ever really had before in his business. And he said, hey, by the way, I'm in a Facebook group, and some other people are asking, do you mind if I put your name out there? Of course not. No, please do. And, here we are, 1,200 e-commerce accounting clients later. It's worked out pretty well for us. But I owe it all to George Carlin, not that George Carlin, back years ago, who asked for our help out of the blue. And it's been a great ride ever since.
Awesome. That's a great story. And 1,200 clients is an awesome success story. Just out of interest, from my personal interest and anyone else listening, how do you manage that many individual clients? Do you have a huge team? How does that work?
Yeah, so we do have a large team. And I always knew that I wanted to grow the business. I didn't want to just sort of be a business that was only what I could do in 40 hours or me and, a handful of people. I knew I wanted to scale large. And so one of the very early investments I made was in custom software to be able to manage all these projects that would tell us where each client was, what we were doing for them, where they were at in this, phase of that month's bookkeeping or that year-end bookkeeping. And that goal-oriented, growth-oriented mindset, I think, is what allowed us to do it. Because, even with just 10 or 15 clients, trying to manage it with Google Sheets and Post-it notes and, a whiteboard in the office was a disaster. So in order to scale and grow, you have to have the tools and the mindset and the desire to get there. That's where I was coming from with wanting to do it. I didn't want to be the hands-on accounting person that was deep in the numbers of one person's books. I wanted to build an accounting firm that could serve a lot of clients. And so that's the way I sort of invested and drove the business. And I think the other thing that helped a ton is I'm not an accountant. Most accounting businesses are run by accountants, and they have sort of an accounting mindset, super conservative, and want to have their hands on everything, have a very hard time delegating. And I come from an entrepreneurial background where, again, my mindset was growth, and I was happy to delegate to people who are smarter than me at the things that we were doing, and I'm good at the growth and the vision and the plan for the future. So I did what I was good at, and they do what they're good at, and as a team, we have a lot of success.
I love that. And that's an amazing insight for anyone listening to take away, is that I think in E-Myth, they call it, entrepreneur, manager, leader, and technician. Mm-hmm. If you're in the Tony Robbins world, they call it artist, manager, leader, entrepreneur. They say most people get into business because they're a technician or they're an artist. They love the art form and they think, I'm going to be great at this business because I can do the thing. And then as soon as you get into it, you realize I need to put on an entrepreneur hat if I want to turn this into a real business that doesn't just drive me, the technician or the artist, to just implode under the amount of work that I suddenly generate for myself. So I think that's an amazing thing to go in as a non-finance, well, not non-finance, but non-accountant to run that business. That's awesome. I love that approach.
Yeah, I think it was a huge leg up. And the other thing that really helped is in my other, prior to getting into the accounting side of things, I'd worked with a lot of small business owners as a consultant on various projects, helping them in different ways. So I was very familiar and comfortable with talking to small business owners about everything, about, what's your goal? What's your vision for the future? Where are you trying to get to? How can I help? Big picture. Whereas, they say, you're the first person who's asked that. The last 4 accountants I talked to, they immediately jump into let's debits and credits and IRS tax rule this. And they lost me. They weren't adding any value. They didn't really understand my business. I didn't know what the heck they were talking about. So you're the first person that's kind of connected on this, owner to owner, entrepreneur to entrepreneur level. And I really appreciate that. So it made the sales process for me very easy because, people just, you get what I'm trying to do. You understand my business, the struggle of being a business owner. And we talked about that for 45 minutes. And then I'd finally say, you did eventually, you called me for accounting. So maybe we should talk about that. And they go, oh, no, you're hired. I don't, whatever the cost, you're hired. I like you already. So I think I had a big leg up over the typical accounting person who, would just go right into, let's talk about details of accounting, which is kind of the last thing any business owner, for the most part, wants to get into.
100%. And I lost, in the first couple of years doing business, I lost a bunch of money through listening to my accountant on how to set things up. Accountants are great at doing the number, traditionally, not you. Accountants are great at doing the numbers, but beyond that, they don't know strategy, they don't know business, they don't understand actually how you should be structuring something. And if you structure it wrong, it turns into a massive pain to restructure it.
Absolutely.
Cool, and I love that. Definitely the business owner to business owner part. I mean, I see that, when you talk to someone who owns a business, it's just different, isn't it? And that's why it's cool working with entrepreneurs and small businesses, because you get to sell to the owner, not to some middle management guy who's nothing wrong with that. But what I heard several years ago, which has stuck with me, is the job of middle management is to not get fired. So trying to sell to those people is different from selling to the owner who gets excited and let's do this.
Right. And they're not as excited because whatever benefit you bring doesn't really come to them. Their salary doesn't change much. And if you screw it up, the blame does come to them. So they've just got a whole different perspective on things. So I definitely like working with entrepreneurs and business owners. I feel like those are my people. I'm them. We connect much better than, when it gets to a certain size where it just, you're talking to somebody who's got a boss and got an org chart, and they're not the same person as I'm used to talking to.
Well, yeah, as they said, you never get fired buying IBM for buying IBM. Was that the slogan in the past? That was how you sell to middle management.
Yes.
All right. So as you said, let's talk about finance and bookkeeping because we also went off track because of me. So why should people use an e-com specific accountant? I mean, why should they be looking for someone e-com specific rather than talking to, Jenny around the corner who's got an accounting practice and they can just walk in and say hello?
Right. I mean, you don't know what you don't know. And it's easy to go and talk to somebody who says, oh, sure, I can help you out. Your business is probably the same as the dentist office that I do and the restaurant that I do and the gas station that I do the books for. What's the big deal? But in truth, accounting for e-commerce is quite different than most traditional businesses in that you're buying the inventory months and months ahead of when you get to sell it. And there's a whole supply chain. Usually people are buying from overseas suppliers and getting it to where the warehouse where it's going to eventually be shipped from. And then even after you sell it, there's, a 2-week wait to get paid and all these deductions that come out of it for, various fees and shipping and referrals and everything else. And it's very hard to kind of line up when I make the sale, but I got paid later and I bought the inventory way before to, well, did I end up making any money on that, right? Because these events all happen in these very different time frames. So how do I tie it all together and make sure that I made money when I sold this product after factoring everything in? And if you go to the down the street bookkeeper or the down the street accountant, they might not recognize the importance of that timing. So they just say, well, let's start with your bank account. And I see you got these deposits. And this month you got a bunch of deposits from Amazon. You didn't buy any inventory. So great, you had a great month. Oh, wait a minute. Next month, you spent $40,000 on inventory. You got the same deposits as you got the month before. And now you lost all this money. Uh-oh, now you're in trouble. Well, so they're really not well versed in the importance of getting that timing right, doing on an accrual basis, and understanding the flow of e-commerce. And then you've got Prime Day, and then you've got Q4, and the fees change, and the volume can triple or quadruple depending on what kind of products you're selling. And it's just not something that the average person doing it for the first time can pick up. And I can testify to that because the very first time we did it, about 4 of us spent a month solid trying to figure out what reports do we run? How do we figure this out? How do we go back and make sure even something simple like returns, right? You get a return. Does it go back in inventory? So it's not a cost anymore. You can resell it. Or is it an unsellable return where you lost the value of the product? You didn't make the sale. Right. And now you've got to account for that. And then you've got lost inventory, and then you've got refunds, and you've got firms that go and capture those lost reimbursements for you. It's just, it's not something that is easy. It's like going to your general practitioner for eye surgery. I mean, they know the eye, right? They studied it a bit in med school, but that doesn't mean they can do eye surgery. So if you have an eye problem, you want to go to an eye doctor. And for us, if you have an e-commerce business, you really need to go to an e-commerce accountant to get the best results. Otherwise, you're just going to have somebody poking your eye with a stick.
And you don't want that. That's a lot. There's something you went over there, which I'd love for you to expand on for anyone who's not familiar with accounting terms, which is accrual accounting. So I know, you're describing cash accounting and accrual. Can you kind of do a brief overview for people so they understand what they should be asking around that?
Sure. Yeah. So cash accounting is basically just what happened in my bank statement. I got some deposits and I spent some money, and the timing of when those things come in is just real time. I got a big deposit on Monday. I wrote a big check or sent a big wire out on Wednesday. And over the course of the month, maybe more came in than went out or vice versa. And although that tells you exactly what happened with your cash, it doesn't tell you anything about whether or not you ended up making money. If you closed the business down at that point, sold the rest of your inventory at the end of it, would you be ahead or behind? You really can't tell. What accrual accounting tries to do is line up when you make a sale with all the costs involved in that sale. So then you can say, okay, I sold a product for $39.95. After I take out Amazon fees, the cost of the product, the ad spend on that product, and everything else, I'm left with $675. And then, okay, now I have to pay some rent and a VA and insurance and everything else. And at the end of all that, I'm left with $2. But at least it's a positive 2 instead of a minus 2, in which case, for every one I sell, I'm losing $2. So why would I try to sell more than I sold last month? That's what accrual accounting can give you, is understanding that profitability month to month to month, even though the inventory you sold, you might have bought 6 months ago, and the day you make the sale, you're not going to get paid for another 2 weeks. And then if you have an Amazon loan, they're not going to give you the whole reimbursement. They're going to work towards paying off your Amazon loan. And there's just a million things that go into it. What you want to know as an Amazon seller, or e-commerce seller in general, is that every time you sell a product, you're making some money. Because if you're not, you're spending a lot, you're you're using a lot of time, you're benefiting other people, including your customers who you're subsidizing essentially, but the business isn't going to go anywhere. In fact, it's going to dig a big hole for you the more you sell at a loss. So you really want to be confident that every single time you sell a product, at the end of it, you made some money on that product. Ideally more than less, right? The higher the profit margin, the more cushion you have, the more you can invest in more inventory and more product launches. But it's got to be a positive number. If it's not a positive number, then really the whole exercise was for naught. And that's frustrating to feel like you're spending all that time and effort and money to end up with nothing to show for it.
Yeah, I've experienced that as well. So I made a lot of money in e-commerce. I've lost a small amount of money doing the same thing as well. And like, it sucks when you have inventory. And as you said, like, if the unit economics don't work and you can't sell it, then people sometimes just end up actually going lower than if they just liquidated or done something else with it just because they want to sell through it. And I've seen that many, many times. Just to change slightly, we kind of touched a little bit there on cash flow. And one thing I've heard many times, I don't know if it's true or not, is that many businesses fail through lack of cash flow, not lack of profitability. Is that something that Capforge can help with, or any resources you can share on that?
Yeah, absolutely. I mean, it's definitely a key component of your business. And it's very possible to have a profitable product that you still run out of money with and cannot continue the business. This is something that, can happen where, especially if you get large orders and you move, let's say you're successful in the e-commerce and online space, and then you decide you want to go to a big box retailer or something, put your product in Costco or on the shelves at Walmart, and they go, great, we need you to send 100,000 products to 400 different stores, and it's going to be $1 million worth of inventory. And you may be able to make $1 on every unit, but it takes every cent you have to ship those products. And they're like, well, we'll pay you in 90 to 120 days. And in the meantime, your stuff's selling like hotcakes. You need to send another $1 million purchase, or I'm out of money. I don't have, and then you have to see if you can possibly, factor that order. There's some possible outs if you have truly, a purchase order from Walmart for $1 million or something. But that's what can happen is you get to the point where you have no more cash to spend to fund the business while you're waiting to get paid, even though once you finally everything settled out, you would have something left over positive to show for it, but you just can't wait the clock out. You don't have enough cash to get you through to the point where you're finally positive. And that is absolutely a problem that we have clients that run into. And it usually happens when you start borrowing, and then you start borrowing to pay the earlier loan payments, and you kind of just get in this debt spiral that it can be very hard to pull out of. So absolutely, working with us, we can help make sure that you never kind of go below that line where you won't be able to continue to fund operations until you get more cash in. And that is definitely something to keep an eye on. And I was saying, we were talking earlier, e-commerce is a tough business from a margin standpoint. You've got to put a lot of money out before any comes in. And if you're doing well, you got to put even more out to keep that growth going. And so if you don't know your numbers and you're not managing that and really making sure that, again, every unit you sell is profitable and profitable enough to keep funding things, you can find yourself in a pretty bad spot, even though ultimately the business could be profitable. But from a cash flow standpoint, you ran out of money.
Yeah, I mean, I've seen that personally when we were running a full service agency. We had a client go from $30,000 a month to $900,000 a month in like a 4-month period. And where they were cash wise then was negative $200,000 or $300,000 in the hole from trying to expand so quickly. And that's when founders get to take on things like, high interest personal debt and all sorts of stuff, which is not a, healthy way to finance in the long term, especially if something goes wrong and then suddenly you're personally liable for all of that, which is nuts.
Right. If you get the point where you're borrowing money from a guy in a trench coat, it's gone too far. That's not a good place to be.
One of those guys in the Amazon industry you can borrow from who are nicer trench coats than that.
Right.
Awesome. Cool. So are there any questions that people should be asking a bookkeeper that you could share so they could validate, a bookkeeper and accountant before working with them? what would be some good questions that someone could take away as some value?
Yeah, I mean, I think the fundamental first question to ask if you're in the e-commerce space is to ask how many other e-commerce clients do you work with? Can you give me some references of e-commerce clients that you currently work with, just so that you know that they understand that space and that they're in it? And then, of course, I would ask them, do you recommend cash basis or accrual basis accounting for my e-commerce business? And if they say it doesn't matter or cash basis is fine, then, okay, that's a pretty big red flag. That means, again, they probably don't really understand the nuances of it. And then you can ask them how they do inventory and cost of goods sold. How do they track that? And if they're telling you, well, every month you have to go count every stock keeping unit you've got and give me an ending balance and all, that's absolutely not ideal, right? You want somebody who can go in, grab the reports, see what SKUs are sold, see what the returns were, sellable and unsellable, and really do an accurate calculation. If they're getting your COGS wrong by 15 or 20% because they don't really know what they're doing or how to calculate that, they could be giving you an absolutely false reading. Hey, things are great. You're making lots of money. Yes, take out that loan, buy more inventory. You're in great shape. And then you go, that seems strange because there's like nothing in the bank. I don't know how I'm going to make this work. Like, don't worry about it. The numbers say you're doing fine. Well, if the numbers are wrong, you could be making bad decisions if you're getting bad data. So I would definitely, current e-commerce experience and references, a cash versus accrual question, and the inventory and COGS questions. If they can answer those three things competently and confidently, then you might be on to somebody good. But if not, if they're giving you kind of the blank stare or the wrong answers on those, it's probably best to keep looking.
Love it. Thank you. That's super useful. And anyone should write those down and take them away when they're talking to accountants. Yeah, one final question actually before we go into our next part of the show is I heard from a business seminar I did at some point that you should be changing accountants every 3 or 5 years so that they can check the previous accountant's work. 'Cause there's something you can go back several years. Is that a thing, or am I just making that up from the back of my head?
I mean, I would say if you're getting good results and everything's working, then it probably doesn't make sense to change because you're maybe changing for the worse. But what I would suggest is a lot of people, they hire an accounting firm, including some of our clients, they hire us and they expect kind of, we're going to do it all and then they're out of it, right? I've got an accountant, they do the stuff. I don't need to, but really it needs to be a two-way street. We need to communicate. And these numbers, I'm not doing them for my health, right? I'm doing them so you as the business owner can pull useful data from it to make decisions. So you want to be involved in the process and you want to be able to look at your own financials and say, hey, this doesn't seem right. I know, I try to keep my cost of goods sold at around 30% and I look at these numbers, you're telling me it's 50%. So either I'm doing something wrong or there's something wrong in the numbers, but you want to be able to have that conversation. And then if the bookkeeping firm is like, oh yeah, we screwed this up, sorry. Okay, then maybe you do shop for another one. If they can show you, well, here's why it is right. And actually it's higher than you thought. And you probably should have brought that to your attention sooner. But you as the business owner then take that and take action on it. But I don't know that I would just arbitrarily change accountants every 3 to 5 years. But what I would do is make sure that you know your own business well enough. You don't have to be an accountant. You have to put all the entries in, but you ought to look at the numbers on a regular basis and have a feel for what they should look like. And then if they don't look right, ask questions and then, understand what the answers are. And then if you consistently are getting oops, sorries, well then, okay, time to change. But if everything looks good and you're consistently getting good results, good service, then I'd say switching probably is riskier than not.
Yeah, I would also agree with that. I've had the same suppliers for a long time. It was just something I heard that in the US you can, or basically to audit your previous accountant's work. Because if you can change it, you can go back a certain number of years. And it made sense to me at the time when I heard it.
If you say, hey, you know what, this seems screwed up and somehow you didn't notice it for 3 years, you can go back and audit your tax returns and recapture some of the lost money if you overpay taxes or whatever else. But again, I would say don't wait 3 years. Look at it all the time. And if it's wrong, then fix it then. And, that would be the smarter play.
Yeah. I mean, we use one of those VAT return services for Europe back in the day where they file your returns for you and you have to pay them. And then 2 years later, we realized they'd been filing the wrong percentage for us because we should have had a discounted percentage, and we had to go and claim back 100 and something thousand from governments. And trying to get money out of governments is like, German government gave it straight back to us, of course, because they were very organized. But trying to get it out of somewhere like Spain or France, where they just have it on paper and they're trying to stamp it somewhere around the country, was the most ridiculous thing in the world. Thanks, Matt. So now we have a controversial take. So something for you to share. We have, what's your most controversial or debatable opinion around Amazon or the e-commerce industry?
So here's something I say all the time, but I don't think the message has gotten out as much as I think it should have yet. And I think there's still lots of people who are teaching it the reverse way. And that is, I feel like, and I can point to clients who have found success with this and clients who've failed to find success doing it the traditional way, which is this. When you decide what you want to launch next, a lot of people will go to a tool like Jungle Scout or Helium 10, and they will start with the product in mind. I'm looking for a gap in, the product category with not a lot of competition, or products with generally negative reviews, but a lot of demand and whatever. And they're product focused, and they're looking to fill a gap or find a product that meets a certain needs. It has to be a certain price point. I want to have a certain margin, whatever. But the whole idea, the whole angle that they're coming from is the product. And I feel like that is backwards. I think the most successful e-commerce sellers that I see start with the customer. Who am I going to be selling to? And maybe you're in the kitchen product space, but it's not just people who go to the kitchen, right? Because that's nearly all of us, right? It's people who cook at home but want to be at a kind of professional level. Those people are going to be my target. And beyond that, it's going to be in the US. And beyond that, it's going to be women. Okay, now that I know kind of who the customer is, well, what TV shows are they watching? What magazines and websites and blogs and podcasts are they reading? And what interests do they have? Well, maybe it's high-end cast iron cookware. Okay, and now in the cast iron cookware space, what do they not have? Maybe there's, and again, I'm just making this up. This example doesn't come from real, right? This is the garlic press of 2024. I'm just throwing this example out. Right. The idea is to identify the customer and then from that, pick the product. Because when you know who the customer is, you can tailor what you're selling them to what they want, and you know where to find them, and you know what their interest is, and you know what gaps you're filling. And you can not just be successful on Amazon, but you can be off Amazon. You can develop an email list, you can develop content, and you can have a holistic strategy around a brand, and then you can add products to that same consumer group that fit further. Okay, I sold you the high-end cast iron pot, and now the pot holders and the pot and the covers and the tongs and the recipe book and whatever. And now you're my customer and you love my brand, and I speak to you, and there's 400,000 of you out there, and I know exactly where you are. I know how to find you, and my cost per click gets low, and my brand strength is good, and people are searching for my brand because I understand the customer. I'm focused on who I'm selling to. Not that I could sell any product to this customer group because I know what the customers want, instead of I'm looking for a product, but I don't know who's going to buy it necessarily. I'm just trying to slot it in somewhere where I think there's a gap, but I don't know how to find the customers or what specifically speaks to them or anything else. And I talk to clients all the time who've, the strategy was find a product to sell. And then they tell me, oh, I'm selling bungee cords. What's different or special about your bungee cord? Nothing. Like literally nothing. Are you the manufacturer of the bungee cords? And that's why? Nope, I'm buying them on Alibaba, same as 40,000 other people. And you're surprised that you can't make money? Like there's no differentiation, and there's no reason for somebody to pick yours over all the other options, and you can't compete on price because you're not the manufacturer, and you can't live on 15 cents a day because you're not, in a country where that's possible. So it just doesn't make sense. But if you start with the customer and develop what you're going to sell in your brand around the customer that you're going to target and find a need and fill it there, I think you're going to have much more long-term success and build a much more robust business than just picking products. But still, I see all the time gurus and courses and YouTube videos and TikToks that say, start by picking a product. I think that's backwards.
Yeah, I love that. I haven't actually heard about it, put in that way. And I really like the fact that if you start from that, you'd end up probably with a different range. So if you started with, for example, cast iron pans, maybe you'd think if you were just doing product that you now sell pans. But if you're going after the customer, maybe they need like tea towels, oven gloves, anything that fits the client, fits the brand. And I think if you ever launch that, I think Capforged pans could be a great name for your forged cast iron pans. Could go really, really well.
Yes, I could.
We can make a whole brand. We can get out ChatGPT. We can get images. I think in about 10 minutes we can build the whole thing out. It'd be great.
Easily, yes. So that's my hot take: is find a niche customer group, and ideally it's something that you're a group member, right? So me creating a product for lactating women, I'm going to have a real tough time with that because I just don't fit that category at all. But if it was me and it's Southern California surfers, and I surf and I'm in Southern California and I'm in you know what we need? We need wetsuits that are a little bit thicker, but with more elasticity in the shoulders for when you paddle. And, I know the space and I know the language and I know where to look for these guys. And I know what they're, and then if I sell them that, I sell them a leash, I sell them a board, I sell them a hat, I sell them merch, because I get who they are. So I think if you want to build a high profit, long-term, defensible business that isn't just going to be knocked off by a Chinese company 15 minutes after you launch and have your market just eaten, where you can develop a rapport with the customer and a relationship where they will buy from you, even if you're not the cheapest, or you're not the first one that comes up on page 1 of Google, you have to start with who the customer is and build that relationship.
Love it. Thank you for sharing, Matt. That's super cool. Okay, so this is pretty much the end of the show. So thank you so much for being here. It's been an amazing discussion and I've learned a lot. And I hope everyone who's listening along enjoyed our conversation, wide ranging from business to bookkeeping. If anyone wants to reach out to you, what's the best way to connect, follow, stalk you on the internet, that type of thing?
Yes, definitely the best way to find us is just go to the website, capforge.com. You can find out more about us, our services, our pricing, read more about me, read our blog, see our videos, and then ultimately, if it seems like a good fit, you're interested, reach out and connect via email, on the phone, whatever you like, or LinkedIn. It's got all of our social stuff on there too. But reach out. I'm always happy to talk to anybody. If we can be of service, great. If you just want to chat or where you're not ready, no problem, no pressure. I just like talking to entrepreneurs. Hopefully that's come across in this, but I'm just happy to chat.
Awesome. Yeah, so that link will be below this episode. Check out capforge.com. Got a great website. And thank you so much for being here. So this brings us to the end of the episode. Matt, thank you so much for being here. We hope you, as the audience listening, enjoyed tonight's episode or today's episode, depending on where you are in the world. And thank you as always for turning into the Amazon Strategist Show. If you do want to follow us on whether it's Spotify or Apple Podcasts, if you click the follow and like button, it helps us go up in the rankings. And if it's on YouTube, same. So thanks so much for being here, Matt, and see all of you next time.